My background is electrical engineering. We purchased this thing for $500,000. Seller finance. It was like $50,000 down.
That's awesome.
We sell this thing in, I think it was 16 months. $1 million profit. And since then.
So you were like, we like mobile home parks.
I love mobile home parks.
When you were like younger, just first getting into real estate, what made you go the whole buy route? Where'd you get the knowledge to do that? Starting from zero, if you had nothing today, no money, no track record or anything, how would you get into real estate and what would be kind of your process?
All right, I would...
Alright, what up guys? So in this video, I sit down with Apurva, Shah of Jay's Investments out of Raleigh, North Carolina. They're a group that mainly buys mobile home parks in the southeast, but they also own a car wash and have a lot of experience with single family and office buildings. Various topics that we cover in this video is how Apurva was able to transition from his corporate job life into commercial real estate investing, his first deals starting in residential and working his way up, and then how he ultimately got into mobile home parks. And a few more in-depth things is how he structures deals, how he raises money, and what his typical buy box is on what he looks for when evaluating a property. And before this video gets started, don't forget, all of these are brought to you by mhpvalue.com. That's my company that does free evaluations and tells you exactly what your park is worth, and I'll help you get top dollar for it if you're thinking about selling. Without further ado, let's get into the video. As far as your guys' total portfolio of everything you own, what does it mainly consist of? I know that recently you've been posting about the office building you guys. I think you guys refied. Or you guys just bought an office?
Yeah, we've been dumping all of our office.
Okay.
So we had a large portfolio in New York, and at this point we're cashing out of New York.
Okay.
More in the southeast.
Go on. Have you guys closed on anything recently as far as like mobile home parks go?
Yeah, so it's kind of interesting. So 2023's market is certainly very different than what it was just 8 months ago or 6 months ago. What we're doing today is more actively working through mom and pops, connecting, cold calling, very similar to a lot of what you guys are doing at other street.
Yeah.
But right now, we in our pipeline we have a deal we're closing next week.
Okay.
We should be that's a 67 unit mobile home park in about 10 minutes from downtown Raleigh.
Oh, okay.
Yeah,
cool.
Pretty exciting on that.
Is it like towards the east or west of Raleigh? Just out of curiosity.
Yeah, no, it's south.
Okay.
Yeah,
Cool.
So about 10 minutes south of downtown.
Yeah. Now with North Carolina getting so much more competitive, especially for mobile home parks, like I feel like 2 years ago to now, it's like I don't know where all the competition came from. But you know what I mean? Like when you're talking with sellers, it's almost like you're always like the fifth guy who called them this week and stuff like that.
Exactly, yeah.
Have you guys shifted towards looking at, like, let's say RV parks, or are you moving away from mobile home parks, or are you guys still MH focused?
No, so and as a quick kind of introduction to what Jay's Properties Investments does, right? So we're a private equity firm that focuses in on buying real estate. Right? So we raise capital, we help our investors get into a passive stream of income.
Yeah.
We have our own operations team that helps in-house with supporting all of the day-to-day.
Okay.
But, to answer your question, really it's our core focus is still mobile home parks. We love them. The yields are still great.
Yep.
It is saturated, right? So there's so many folks that they're like, I heard mobile home parks is the next big thing, and it's already big. There's so many folks, just like you're saying. And we get the same thing. We get a bunch of calls saying, are you willing to sell your park? Are you willing to sell your park? And usually unfortunately, the numbers just don't work for us to sell it. But core focus is still for mobile home parks. We do multifamily. We just purchased a car wash. Car washes as well. But we love mobile home parks. That's definitely the core value for us.
Of total ownership, what's kind of the breakout of how much of each percentage-wise would you say? Yeah,
so I would say about 75% of our portfolio is mobile home parks, and then 25% is other assets. So obviously office, the car wash, basically.
Cool. And the car wash, is it? So I've actually we were thinking about becoming car wash brokers with like the increase. I've been seeing like Mr. Clean, Zip Car Wash, like those national chains of them. I've been seeing a lot of them pop up. And then we sold a park for a guy that he had parks and was selling them off to get fully into car washes. So it was something we were looking at for a long time. Is that like the style car wash you guys have, or is it like a self-clean kind of car wash? Or
yeah, so it's a self-serve car wash. We do have 2 auto bays there, but the big thing is you don't really need staff to be there on site. Right, it is operations heavy, even though there is there's obviously no one who has to like actually clean your car and things like that, but you still have to deal with the coins. You still have to work through all of those little pieces and make sure there's no vandalism or anything like that. Yeah,
cool. So what just to get like a little more personal with the questions, can you give kind of like a brief overview of your background, how you got into real estate in general, and then how you got into the mobile home park side of real estate?
Sure. So my background is electrical engineering. I graduated in college and then basically moved down to Raleigh, North Carolina for corporate. Originally, I was just like, hey, I want to buy a house and rent it out with some friends and just have them pay my mortgage.
Yeah, were you like watching like the Bigger Pocket stuff, Burr Method, all like the basic stuff?
I wasn't doing as much, and I wish I did. I wish I learned real estate a lot earlier. Yeah. My family, they have a little bit of a background in real estate as well. My dad did conversions of office buildings to luxury condos, so I worked with him on a lot of projects, which was great, and it got my feet wet. But when I moved to Raleigh, obviously I didn't want to be a part of their business. I wanted to build something on my own. So what happened was we bought this house. We started renting it out. Those roommates actually became my business partners. Yeah. And those business partners, we started flipping houses. Okay. We started renting houses. We started wholesaling to really just build up that capital stack. Yeah. And all of this was while I was working at in corporate as an engineer. Yeah. And
so I'm sure your time was you're
man.
busy. You're a busy guy.
Yeah. So I mean I remember pulling basically 17-hour days for probably a year, maybe 2 years. Yeah. And it really launched our business.
And that was all single-family stuff you were doing then?
Yeah, all single-family stuff. No other asset classes, no triplexes or quads or anything like that. Just single-family homes. And we did that for about 3 years, and it was great. We made some amazing money, but we said, hey, look, the single-family market is just becoming so saturated with everyone wanting to flip houses and doing Burr Method and all these different things, which is incredible, and it's a great place to start. Yeah. We wanted to do bigger things, so we started buying. The team and the partners that I had at the time, incredible folks, but we all basically said, hey, look, everyone's going to go in their own direction. One of the business partners, he moved to New York. He was on Wall Street for a while, and for me, I just said, hey, look, I built up some money. Let's buy some multifamily. Yeah. And one of the multifamily opportunities was in Fayetteville, North Carolina. I was actually trying to wholesale it. I didn't want to purchase it, and that's actually how I met my now business partner, Jack Yen. Yeah. And incredible guy. He's super data forward. And since I'm an operations guy, he's the data. It was a really good relationship to help build where we are today.
What when you were like younger, just first getting into real estate, like what made you go the whole buy route / wholesaling? Like where'd you get the knowledge to do that? Was it because you were familiar with your like father doing real estate? You kind of just knew how the game worked, or like what was like kind of the first steps?
No, there's a huge learning curve, right? So and it wasn't just, hey, let me go buy a property and then figure it out. And sure, part of it was that, but before that, and having that engineering background kind of helped me just have that a little bit more of a hands-on approach. Yeah. And from an operations standpoint, I kind of understood that and how to manage some contractors because of the engineering side and what I was doing in corporate. But a lot of it was just reading. It was a ton of Bigger Pockets, listening to podcasts. Yeah. Just trying to get value out of like, how do you flip a property, and like kind of learn the basics. Yeah. And we've made so many mistakes across the board, right? I mean, like it's just part of that learning curve. Yeah. We bought the first one, and I think the numbers were. We originally were under contract for at $90,000, and we got an inspection done, and apparently there was no plumbing at all.
Oh, nice.
Yeah, so all the copper pipes were ripped out. Yeah, it was nuts. So we're so glad we got an inspection done.
Yeah.
And like that was one of the things I was like, oh, we might not get an inspection, and at the last minute we were like, let's
you're
let's
like, oh my god, this is a big thing. I almost said not do it. And then,
And so then we actually retraded the contract to I think buy it at $45,000.
Oh wow.
Yeah. So big discount there, and then ended up selling it for I think $140,000.
Yeah.
Somewhere
okay,
around there.
nice. Yeah.
So incredible profit. It was great. It was just, imagine we didn't do that inspection. There's just so many little things that delayed the project from the contractors and trying to navigate all of that, especially on the first deal.
I guess that's a good thing about North Carolina for barrier of entry too, even in the small single family deals. Is like growing up in South Florida, and then when I was first trying to get into real estate before I figured out this whole like commercial real estate, mobile home park stuff, I wanted to get into like house flipping or something like that. But the problem is when like your typical house is like 250 plus. Yeah. The barrier of entry is a little harder than...
The barrier of entry is higher, and a lot of people, you're not going to have the cash to just say, hey, let me go flip a house, and if you want to go to get hard money, especially in today's market, those interest rates are crazy.
Yeah, it's tough,
so it's very difficult. And again, this was 8 years ago, right? So North Carolina, it wasn't as saturated. The house prices were a lot less.
Yeah.
Today, I can't find a $45,000 house. Maybe you got a $45,000 mobile home, but
especially the way Raleigh's going, it's growing heavy.
Exactly.
Yeah, everyone loves North Carolina right now. Yeah. And so later on, how'd you end up getting the mobile home parks? Like, how'd that become your guys' area of focus?
Yeah, so one of my old business partners, Hansel Rodriguez, a great guy.
You were partnered with Hansel?
Yes.
No way! Wow, that's cool. Small world. I had no idea.
Yeah. So obviously he's in Florida now. With Core, and he's built a really great company around that.
Yeah.
So him and I we started this whole process of flipping houses and all this, and he tells me, hey, look, I actually have a deal in Michigan. Midland, Michigan, and he's like, "Hey, do you want to partner and work on this this mobile home park together?"
Yeah.
I was like, "Do the numbers work?
Yeah.
What's it look like?" And he's like, "Yeah, I think the numbers could be a fantastic return for us." We purchased this thing for $500,000. Yeah. Seller finance. It was like $50,000 down.
That's awesome.
It was fantastic.
Yeah.
We sell this thing in, I think it was 16 months, $1 million profit. And since then,
so you were like, we like mobile home parks.
I love mobile home parks. Right. So that was what really pushed me. It was like, hey, multifamily is great. Apartment complexes are amazing. You can make really good money, but let's transition. Let's try to find the high yields on these mobile home parks. Yeah. So we've done a couple of deals in Texas, Arizona, obviously the Michigan deal. But I liked having a little bit more control in the operations and having boots on the ground. So for us, it was let's take a step back. Let's figure out how we can do this entire business here in North Carolina and Virginia, where it's within a 2-hour drive for us.
And you guys like it being localized, so you're a little more hands-on.
Yeah, we definitely like the a little bit more hands-on approach. Right. So I think that's been the big thing for us.
Yeah, we've done a deal with Hansel in Daytona, Florida.
Really?
Yeah.
Really? How did that go?
It was just clean, easy deal. It was like 50 units right in Daytona. Florida.
Awesome.
Yeah. I talk over Ricardo a lot. His
analyst, right?
guy. Yeah.
So I think he's here. I may try somewhere.
Yeah, he's coming to dinner with us Friday night.
Nice. Okay.
So, are you still there Friday?
Yeah.
Friday night.
I'll be here till Saturday morning. Okay. Where are you guys going?
Eiffel Tower restaurant. Yeah, I'd invite you if we could add to the reservation, but they're like total pain in the asses about
the it's all
reservation.
Good. I was trying to figure out how to get a reservation at Carbone.
Yeah. Did you see was it Princeton Capital or who did or MFI? They did a Carbone dinner last night for a bunch of people.
They did. Yeah.
I'm jealous, man.
I was jealous.
That's a cool reservation.
Yeah. When you're in New York, did you go?
Yeah. I went a handful of times. So coincidentally, I'm in like this business Facebook group, and it's all like they verify like your net worth and stuff to get in it. But it's like a legit Facebook group with like all these big business guys, and one of them is like the COO of whatever restaurant group owns Carbone.
Wow.
But like, yeah, I'd hit him up. He just gets everyone reservations in the group. If you just ask him a few weeks ahead of time, yeah.
Okay, I need to hit you up.
Yeah, no, so if you're ever in New York, let me know. I can get you a res there for sure.
Awesome.
Yeah,
okay.
yeah, definitely.
Very cool. Very cool. I appreciate it.
Yeah, no, anytime.
My wife's going to actually be really happy about
Yeah,
this.
no, it's the craziest coincidence.
Yeah.
Yeah, I thought the guy was full of shit too. Then all of a sudden, he's like,
make one phone call. And call
yeah, it was Friday. He got me the day of reservations on a Friday.
Wow.
Yeah, Friday night, 7 p.m. peak reservation hour, so it's cool.
That's incredible.
Yeah, when you're looking at mobile home parks and operations, why, well, I know it seems pretty obvious, but any specific reasons why you would want to be so localized in North Carolina rather than looking more nationwide for mobile home parks? Because I know some people have the style of they want to stay more localized to their areas. Other people are just super focused on the asset class, but nationwide. Any particular reason why you want to stay localized rather than, especially now with North Carolina getting so competitive, looking elsewhere, like to the Midwest or different states?
Yeah, so
because it sounds like you're not worried about it. Because if you did a Michigan deal, for example, like obviously out of state, you guys can handle.
Yeah, we certainly can handle it, but because yields are a little bit more tight now, and if we don't have the right team and have boots on the ground, we feel that it opens our investors as well as ourselves into quite a bit more risk.
Okay.
Every deal that we do, we're investing our own capital alongside with our investors, right? So if I don't feel comfortable investing in Wyoming or some spot in the Midwest, I'm not going to have our investors do that either. The other side of it is, obviously North Carolina is saturated. We are looking at different, other areas. Like we have a 2-year plan of potentially going after South Carolina, Alabama,
and Virginia too.
Yeah,
right?
Virginia. Yeah. That essentially the Southeast is where we want to have a really strong foothold.
You guys like Georgia too, or no?
So yeah, like we're looking
pretty
at
much anywhere.
Yeah, basically the Sun Belt, right?
Yeah.
For us, it's been building the right team and understanding how each person can navigate all that.
Yeah.
Obviously we want on-site manager, we want a regional manager. So right now we have staff that focuses in all areas in North Carolina.
Yeah.
So it's great. We would just have to build that out in different states.
Yeah. What's your typical buy box when you're looking at deals? Like, are you guys IRR driven over like a 5-year hold, or are you guys looking at day one cap rates, or what's kind of your main metric, or just your focus when you're looking at parks?
So main metric for us is cash flow, right? It needs to be able to cash flow. Now, in the event it doesn't cash flow day one, understood, it is a competitive environment.
Yeah.
We get it. So a lot of times what will happen is we purchase these assets may not cash flow for 6 months. We'll raise rents, we'll add value, we'll spend some money on building a community versus trying to just be a landlord and not do anything and just raise rents. That's not how we like to operate. So for us, it's been as long as we're able to cash flow starting year 2 and understanding what that exit and business strategy is, that's huge for us. And
do you guys shy away from private utilities, or are you guys like city lot rents only and all that, or are you guys kind of just if the numbers work, the numbers work?
In an ideal world, we would love tenant-owned homes.
Tenant-owned homes, city utilities, $200 below market rents.
Wonderful. But no, so we won't shy away from having private utilities. I mean, the deal we're buying next week is literally a wastewater treatment center. So cool. A lot.
So you guys will look at a lot of stuff. Yeah, I know. How big of a deal is that?
So 6 to 7.
That's the Raleigh one.
Yeah, right. 6-7 units, $4 million purchase price. So it's getting up there.
Yeah,
for
definitely.
Price per lot.
Yeah, that is up there. Damn. Raleigh's getting competitive. I sold 70 East RV Park in Garner. For 9.1. Wow. That was, I think, 120-ish units. So that was like 80 a pad. Yeah.
Do you know what was the going in cap rate?
Oh man, dude, it did not. It didn't pencil.
It didn't pencil, right?
Man, I sold it to, but.
Man, all right, yeah.
Dude, like it didn't pencil, and I just called on it. And it's like, I'll pay it. I'm like, I don't know. However you move the numbers, you got it. Like,
no, I mean, ACG has a strong foothold in North Carolina. I mean, he's also local. He actually lives 10 minutes from my house. So great guy. Met him a few times, and we've been using some of the comparables on that side too. He has a park about 3 miles down the road from where we have ours. And so we're understanding, like, okay, his lot rents might be $550 or whatever that number is, and we're saying, okay, we're at this number, how do we get to there? But it's also cleaning up the community and making sure it's paved and all these different things.
What's kind of like the smallest deal you take on in North Carolina? Obviously, if it's like right next to one of your parks, you probably take on any size. But like if you're looking at a new market, what's kind of the minimum you're starting at?
If we're looking at minimum lot size, I mean, typically 30 is where we cut it off. I mean, if it's 28 units, sure, yes, we'll work through it. But if even if it's in North Carolina, we like to stay at around 30 units, and then purchase price of about $1 million above.
Cool. And do you guys structure it, like when you raise your money and you're structuring the deals, on like a deal by deal basis, or do you guys just have like a general fund / pool that you buy properties with, or how do you like kind of structure your fundraising?
So funding is deal by deal. So every opportunity is going to be different. The numbers, the IRR, all the returns, everything's going to be very vastly different. So we don't have a pool, a fund or anything like that, but we'll raise capital based on what's happening on that.
So like standard syndication.
Standard syndication, or we'll do debt partner agreements, depending on how the deal works.
And do you have just like a few main capital partners, or do you raise from a lot of money or a lot of people, or what's?
So our minimums now, we for raising capital is $100,000. So anyone who's looking to invest, great. If you have $100,000, and a lot of times you'll have to be accredited as well. But for us, it's we've had a lot of repeat investors, a lot of folks who PhD professors, we've had doctors, nurses, all kinds of folks, engineers who've basically invested with us.
And how'd you find different partners?
So a lot of these guys, I mean, it's just networking, right? I mean, a lot of it's through, from corporate. When I was talking to a lot of individuals, and Jack's side, he was on data scientist for basically a medical group. So he's raised some money through just his corporate side, and his wife's a doctor, and it's kind of just friends, family, and other investors who've said, hey, I really like what you guys are doing, and I invest. And it's just been growing from there. When
you're buying properties, are you usually on a short exit plan, or how long is your hold period planned out? I know things change as you own properties, but
so our first couple of properties that we've purchased, we likely will not. We likely won't sell those assets for quite some time. We got them at a great price point. They're just good assets to have. But for a handful of our assets, we usually like to do a 5-year turn. 5 to 7 years usually is where we're at.
Cool. All right, few trick questions, probably like 5 more minutes. These are kind of random. Sure. Starting from zero, if you had nothing today, no money, no track record or anything, how would you get into real estate, and like what would be kind of your process?
All right, I would go into sales. That is the first thing.
Because you need income. So,
you need income. So you need income, and you need people to trust you, and you need to learn the skill set for being able to sell yourself. Right. And sales is wonderful. I think a lot of times you have to change the narrative of how we're not trying to be sleazy sales folks or anything like that. It's more about having an offering and being able to understand what the other person needs. So sales is the first thing. Bring income in, take that income, be able to have. It might not be enough, but after some time, I would think probably within a year, you save up a lot, and then you're able to deploy it in, whether it be an LP or someone else's syndication, or try to see if there's single family, or if there's some sort of rental income or whatever I can do.
Would you recommend starting with smaller deals first, or try and like wholesale, get enough money, or like what's kind of like the strategy there you would do?
Yeah, so
I know it's a loaded, tough question, but
it is a really difficult question. Right?
Yeah.
So it's dependent on what your long-term goal is.
Yeah.
Do you want to have a bunch of units and a bunch of assets that give you passive income?
Yeah.
Or do you want to continue to work and try to find each deal by deal? Sure, you might make $5,000 on one deal, you might make 10 or 20, 50, whatever it is. That's awesome, still great money, but what is that long-term goal? Or do you want to wholesale and then buy these buy and holds?
Yeah.
Right? Again, everyone's business strategy is going to be different. I mean, there's still folks who I met a guy. He's been wholesaling for 30 years.
Yeah.
And he continues to wholesale. He doesn't buy any. He has no assets. He just says, hey, I'm going to grind. I'm going to continue to hit the phones and do his thing. And it's
some guys just like the chase, man.
Yeah. The chase is great.
Yeah, Ben on our team, he's one of those guys that I think will always be brokering or wholesaling deals. He's like one of those guys that loves the chase. I want to be like just rich and
most wealthy folks own assets. Right? That is the side of it. And also for me, I'm not someone who wants to work for many years.
One thing that I'm kind of stuck myself is. So I make good money, and we were talking last night about it. I make decent money with the brokerage stuff, but I'm on the fence whether I reinvest money to try and grow my own team and get my income up and then and LP a bunch of deals rather than going out and buying myself. Or should I just fully jump over to the buy ownership side and stop brokering? That's where I get kind of conflicted myself. Like, what's the best use of my time? How kind of passive... I know it's not fully passive owning deals, but like, is the management tough? Like let's say, all right, I know. Like you're working. I'm like, brokering deals is tough.
Sure. Yeah.
Is managing deals as tough as running a brokerage team? Would you say?
Yeah. So. Management is tough.
Yeah, because I know everyone always wants to be like on the ownership side of things, but I am hearing like management's not that passive, where it's like if I'm good at brokering, maybe I focus on brokering just LP deals instead of trying to...
Yeah, so it's dependent on each person.
Yeah.
So like my wife and I, we talked about this.
Yeah.
She's like, man, I don't know how you deal with some of your tenants and how you're navigating all this, because she's like, I would go crazy. I don't want to deal with all these people.
Yeah.
And it's also dependent on your tenant class and all these different things, right? So obviously, if you have a Class A multifamily apartment complex, those
it'd be much easier management than
it might be, or it might be difficult, like because they expect something very very different, right? And then you can also have a Class C property, and it could just be easy.
Yeah.
And it's every property is going to be different.
Yeah.
So my question to you would really be like, well, do you enjoy working with tenants? Do you enjoy managing that staff that would help support that, or do you want to work with tenants? And keep in mind, some are crazy, some are not, and some are everything in between.
I think I personally would find more, and this is why I lean more towards getting on the ownership side. I think I'd find more fulfillment in like actually improving properties and turning them around and seeing like a product of my work. Yeah. The brokering stuff is kind of just like a dead end thing. It feels like you're always just chasing the next check, and it ends there. So that's why I lean more towards the buy side. But if I'm looking at most effective use of my time, I think, all right, if I were to have $100K into a deal, and let's say I doubled it over a 3 to 5 year hold, whatever, a successful exit, not a home run, but like just did good on a property, doubled my money in a few years, and then got out. I'm like, a lot of my money would be better reinvested into the brokerage, because I think there's like a huge value play in brokerage right now. There's a lack of technology in commercial real estate, mainly surrounding marketing. Like something as simple as like a text blast I did has gotten me more results than like months of calling. And I'm like, all right, there's like a huge value play that I could like reinvest in right now in brokerage. But yeah, that's why I just get conflicted. I know I'm kind of bouncing around a lot. But,
yeah, so I mean, I think, and keep in mind, you can still broker and you can still own, right? So that's like, it's essentially we kind of break it down as, hey, brokering is your W-2 job. Hey, look, I'm going to continue to make money, and you're also sourcing deals. You're seeing these deals come through, and you say, oh wow, this is actually a really good deal that I want to buy. You technically are your own broker. You can figure out the whole deal, and you're understanding the underwriting. At that point, you just need to build a team around how can I purchase this new, how can I purchase this property? How can I manage it? How can I have staff or a management company? And if you're like, hey, I really want to be passive, get a third-party management company. Make sure the numbers work, right? Have a business plan around it. But I think that's an alternative as well.
I have so back in the day, there was one deal, like 5 more minutes just to talk through a deal, because I know you got to get out of here. Have you looked at Stevens Mill Village, like a little 25-unit park? I showed you guys like way back. It's in Goldsboro, but the whole park's in a flood zone.
I think I remember that. Because I remember Goldsboro wasn't like our one of the markets. It's basically a tertiary market. And so for us, we were like, do we want this? And do we want to work with the flood zone? And like, I think there's also like some. What was there those like multifamily units, and then it had a.
No, this was just a park.
Okay. It was just a park. So I think that something like that is difficult to especially if it's going to be you're like a first buy. Like for us, we potentially would look at it, but I think it would take some convincing. Yeah, I know the flood zone's been like a huge issue, but anyways, it's came back around. Like the seller kind of pulled back on selling, but now he'll look at an offer significantly less than what we were marketing at. Okay, like he'll take 500, and it's 25 pads. I know Goldsboro, though, it's only like a 300 lot rent market. It's not like a rockin'. Yeah, your valuation certainly you can't push.
Like rents aren't hitting 450 anytime soon there or anything. And I know Goldsboro's not really the growing market.
No, it's actually a declining market. So we were looking at some metrics on that. Goldsboro has a declining population, so it's not a good look. I mean, for when lenders look at it, when other investors are looking at it, they're going to look at can you finance it? What's your insurance going to be? There's going to be a lot of expenses, a lot of things that are going to happen on that side, and it's very difficult to swallow the pill on that.
That makes sense. All right, well, Apurva, thank you for sitting with me. I know you got another meeting to run to. We'll definitely do another one. I actually want to pick your brain more so on like kind of personal advice of what you would do in my position and stuff.
Sure.
I know we don't have a ton of time now, so thanks for sitting with me. And we'll get together another time. Yeah, anytime, man.
Awesome.
Thank you.